Welcome to the Inveslo Academy's video series. Introduction to Forex. In this video we will explore the definition of the Forex, market participants, Forex working hours around the world, and main trading hubs for FX trading. Term Forex stands for foreign exchange and refers to a global network of participants trading currencies from all around the world. With the advent of online trading over the internet, Forex has become accessible to almost anyone, even just individuals like you and me. The Forex market is popular for a number of reasons. Tourists use Forex when they exchange money for overseas trips. Day traders buy and sell currencies in Forex to make money from price changes. International and domestic corporations engaged in importing and exporting goods and services use Forex to pay in foreign currencies. Financial institutions such as prime brokers and big funds provide trading venues and platforms to retailers and purchase currencies to diversify their portfolios. Big banks deal in large amounts of foreign exchange to facilitate their customers' FX needs. Central banks manage their country's foreign reserve and government finances through the Forex market. These participants are grouped into three tiers. First up, we have the interbank market where central banks and international banks exchange currencies. 64% of all transactions occur here. In the second level, known as the dealer market or the prime brokers market, big funds and brokers exchange large sums of money directly with the big banks. The third level is the retail market, where day traders and small investors trade or hold currencies. Those are either corporations or individuals who don't have direct access to the interbank market. With such a wide range of participants, it is not surprising that the Forex market is the largest financial market globally, continually growing, with $6.6 trillion in trading volume per day. Forex turnover is 300 times greater than the New York Stock Exchange, the second largest financial market with about $22.4 billion traded daily. Forex is a global market that operates 24 hours a day, so trading can be done almost anywhere and anytime, during regular business hours, after hours or even midnights. There is no centralized market or physical location for Forex. Market activity usually peaks during three main sessions: Asian, European, and North American. Trading starts on Sunday night at 2200 Coordinated Universal Time in Sydney, followed by Tokyo opening at 2300. While Asian markets close at 9 o'clock, London has already opened in Europe at 8 o'clock. The New York market joins London at 1300, and trading continues in both European and American markets until London closes at 1700. Usually, this period is the most liquid trading hours of the day. A new trading session begins in Sydney when the US market ends at 2200, and this cycle continues until the end of the week. Remember that the opening hours of the Forex market will change in March, April, October, and November because countries move to daylight savings. London is the largest global hub for Forex trading, with 43.1% of the total daily turnover. New York holds a 16.5% share in the next spot, followed by Singapore, Hong Kong, and Tokyo. Now you know how Forex works, but it is more important to know how to trade. So stay tuned. Thank you for watching.